Welcome to ShortView Trading, it's your morning market hit for Wednesday, 12th of August. What matters today for traders? Well, what a fascinating trading session yesterday with many and indeed most of the key moving parts across global financial markets fitting together in a consistent pattern. And possibly really quite a key trading day in that sense, with marked rotation across many parts of the global financial markets. Sitting right at the heart of that movement is really what happened in bond yields. US 10-year bond yields backed up about 5 basis points yesterday. Purportedly, that was on the back of potentially a Russian vaccine, or indeed the producer price inflation data in the US coming out higher than expected. But in reality, it's the continuation of a trend we've seen since the low in yields in the US on the 4th of August. Since then, US 10-year bond yields are backed up from 52 bips to around closing at 64 yesterday, as you can see on the chart in front of you now. And that's driven all sorts of price action across all sorts of asset classes. In particular, what we've seen as bond yields has backed up is we've seen some tightening of liquidity, and the liquidity indicators get hit quite sharply. Typically, those are silver, gold, Bitcoin, and indeed sort of dollar weakness is an indication of liquidity in financial markets as well. All of those trends reversing in the last few days. Gold in particular, having put in a key day reversal a few trading days ago, was down sharply yesterday, as was silver, also down very dramatically from its highs of a few days ago. Now, of course, these have been frothy prices. They've become very sort of consensus long, consensus bull trades, so they're crowded, so it's little wonder as they reverse quite sharply. But it's not just liquidity indicators, it's also the sectors within the stock market. You'll see that tech underperformed yesterday, but value stocks outperformed. So tech, defensives underperforming as bond yields back up, value outperforming, led in particular by the banks, which correlate very nicely with the bond yield. And over and above that, critically, we had a key day reversal on the bearish side in the S&P 500 futures, a key indication that marks a change in trend on a 1 to 2 week basis. Of interest, that was very consistent with what we were talking about yesterday, with our short-term risk appetite and other trading models generating pretty much across the board sell message as of yesterday, hence why we're advising clients to short the S&P futures on strength in yesterday's trading session. So I think with a key day reversal, with the message in the models, there's probably a marked change in trend for the next week or two in markets. To see how we're playing this, please see today's Daily Rag, available to subscribers via the website. So what are we watching today? Well, given the producer price inflation surprising to the upside yesterday, today's consumer price inflation will be watched closely as well. Added to that, you've got US weekly mortgage applications out of the States. That's key, gives us an insight into how the housing market's likely to be behaving at the moment. Over and above that, there's some Fed speakers out on the stumps, hitting the stumps this afternoon, including Kaplan and Rosengren. So that's it from us. That's your morning market hit for Wednesday, August the 12th. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Facebook or Twitter. Thank you for listening. Stay safe and trade well.